So after today, I think we need to take a look at the market, at the stock market at least. Um, I've noted this in my previous video. The um, Nasdaq 100 and the semiconductors both came back up to test their all-time highs. Here's the semiconductor index, and it's not unreasonable to think that we would get either a pullback or some sideways churning at that level before um, either one of those um, indexes could go through that resistance zone. So in that regard, nothing unusual is happening. We're just pulling back from that those all-time highs from that resistance. So at this point, there's nothing at all wrong with the chart of the semiconductors or the Nasdaq 100. This just looks like a pullback into a half cycle low. But I will say this: this is occurring earlier than I would ideally like to see for a half cycle low, and that may just be because we had this slingshot move right back up to the highs, but then couldn't get through those highs. So that could very well be what is triggering the move into the half cycle low earlier than normal. We just rebounded quicker than usual back to those highs. Now, typically a half cycle low, it usually will push the 3-day RSI to oversold. So we've accomplished that today. We're at that point. Now, that doesn't mean that it has to stop and reverse immediately, but it usually doesn't spend too long below this oversold. It doesn't spend too long in this oversold condition before starting to rally again. So you can kind of see back here what I'm talking about. It doesn't last very long before the market starts moving back up. That's what should happen. That's what I'm expecting to happen. Now, like I said, it doesn't mean it has to turn around tomorrow, but it should turn around next week. We shouldn't spend very long in this oversold condition. The S&P and the Dow, though, is where it becomes a bit concerning. Neither one of those made it back to test the all-time highs like the leading tech sector and the semiconductors did. So this move into a half cycle low is threatening to retest the intermediate cycle low down here if we don't bottom pretty quickly. And while I don't think the odds are extremely high that the market's going to come back down and retest this low here, I could make a case that it's possible. Usually I would only expect that to happen at a multi-year cycle low, and the last one that we had of those was, of course, in early 2016 at the 4-year cycle low, and that did occur as a retest and actually a slight undercut. Let me widen the chart out. All right, so you can see both of these exhibited that W-type bottom. The initial move down into the as we started the move down into the 4-year cycle low. This came as a full retest of this initial leg down. We got our bounce that rolls over. This was our failed intermediate cycle, and that completed the 4-year cycle low. And it's kind of hard to see here, but this retest actually did undercut this first leg down, and I would expect this kind of a bottom at a multi-year cycle low, this W-type bottom. Once we got through that, most of these you can see don't really form that way. Just a straight shot up. Here again, these were so mild that they were just kind of a churning intermediate cycle low. But just like there are half cycle lows very often embedded within a daily cycle or an intermediate cycle, and these half cycle lows can tend to be um, kind of sharp, especially if it's a half cycle of like intermediate degree, and maybe it's also a half cycle of a yearly degree. Well, I could make the case in this chart that we are at a half 4-year cycle low. So we're 2 years out from this um, 4-year cycle low here. So this could not only be, a yearly cycle low forming, but this could also be a half 4-year cycle low forming. And, that being the case, maybe we do get, one of these W type bottoms, since this is maybe a little bit um, more extreme yearly cycle low than what we would normally expect. And then we also have to consider we just really haven't had any volatility since the election in November of 2016. So, we're due for some volatility, and we're getting it. And so while, that it's not my primary expectation, I'm not going to rule out that this may turn out to be a W type bottom with a full retest of this February low before we complete this correction and then get busy again on the upside. And this, I'll say it again, this is not a final bull market top. We just don't have the conditions yet for that. We don't have the extreme complacency. We don't have anything that was even vaguely um, characteristic of a bubble. We were at this top here. The market was barely 14% above the 200-day moving average. That's not a bubble, no matter what people would like to believe. That's just not the conditions that exist at a bubble. And usually a bubble will rally 100% or more in a year or less. And you can see we're not even vaguely close to anything like that. So this was not a bubble top. You didn't hear everybody in the restaurant around you talking about how they were getting rich buying stocks. We did hear that kind of talk from the general public about Bitcoin, so that did have characteristics of a bubble. But stocks, we just don't have anything yet that would be symbolic that we've had a final bubble top. So this is just not a final bull market top, not yet. So here's a chart of the Nasdaq. Nothing has changed. I've said it a dozen times. Over the last 2 years, and nothing has changed. 10,000 is going to be a piece of cake. Once we get this breakout, you can see the character of the market change. We started to get a very powerful rally, and all that's happened so far is we've gone about halfway there. If we kind of round a little bit here, we've gone from 5,000 to I think we went just a little bit above 7,500. So we've made about half of the move to 10,000, and now we're getting a sharp, scary correction, something to clear sentiment and set the stage. And then once we're done, we're going to get the second half of this leg up that'll take us to at least 10,000. And at that point, depending on how quickly we get there, then maybe we would have a bubble, and then we would need to be getting out of Dodge just in case the bubble pops. But as of right now, nothing has changed. We've got a breakout from this 15-year, 16-year consolidation, and the market is making a beeline towards 10,000. We've got halfway there, and we're getting some sideways churn. Again, not unexpected, considering that the semis have tagged their all-time highs. Here's the long-term chart of the semis. You can see we've just come up marginal breakout above that level, and we're churning, which is again, not out of line. Um, it it's not going to be easy to go through this kind of a resistance level, especially on the first try. So nothing unusual here, but we're going to have to go through that uh, in order to get that second leg up in the Nasdaq. And so, um, I don't know how many more days we're going to have to churn, but eventually we're going to be done with this sideways consolidation, and we are going to break out above this. And when we do, the same thing's going to happen here that happened in the Nasdaq. We're going to have a very strong trending move uh, once we get this breakout, and that's what's going to push the Nasdaq to at least 10,000. So, um, we may have to weather a W shaped bottom this time, simply because this may just be a half 4-year cycle low, which means it could be more extreme than most of the um, yearly cycle lows we've seen, over the last couple of years. But ultimately, this is not the end of the bull market. And once we're done with this, then the semis are going to break out above this high, and the Nasdaq is going to go to 10,000.